Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 30th at 11:31 a.m. There's a couple interesting things going on. There's a bunch of House committees talking about crypto. The vast majority of them have no idea what they're talking about. Not that I chimed in for much time, but their perspective is always from the outside looking in because none of them have any experience with the inside looking out perspective. You cannot just take on that perspective, you have to experience it. And the only way you can experience it is over time. And that's kind of like time horizon. You need to be exposed to particular protocols and assets for a long enough period of time to really understand what they mean for your finances over that period of time. And that only once you have a time horizon that's remotely reasonable and you have that position for such a period of time can you really understand what it means. I mean, the productive assets in the crypto space make REITs look pretty trivial, and they've marginalized them in many regards. Come on. That's a crazy reality. We're talking about corporations, businesses that have properties that take in revenue. And in a matter of a year and a half, the productive capacity of crypto assets has marginalized the usefulness and meaning of REITs being in a person's financial portfolio. And these are productive assets that are sourcing revenue from sustainable sources. You know, a REIT, people love REITs because they're dividend bearing instruments that pay you 90% of all the income of the REIT from rent or, data center income. Come on. That's crazy. And people love that stuff for a reason because it's a recurring revenue stream. But the recurring revenue stream on transaction fees changes everything. It really does. You know, it's unfortunate what's going on in government, looking at what's going on from the outside looking in and not the inside looking out. It's really unfortunate. I want to show you. Preston just texted me on Twitter, direct message, and not to make it public, but I might as well just say it verbally. I don't need to show our conversation. But my focus on everything I do is really banking and working assets. I see crypto assets, working assets, as far superior to anything legacy finance has to offer. Preferred stocks, dividend bearing stocks, or high yield stocks or higher yield stocks like REITs. I can't do what I do in the crypto space in legacy finance. They don't have the products and services. They don't exist. And you got the government saying or criticizing the meaningfulness of these assets to a person's financial well being. And that's a tragedy because, it's all about opportunity. And the way I've been participating in the crypto space and actively attacking my financial structure or the way I deploy capital. Nothing works like this in the legacy finance. There's just no opportunity. And if I see it like that, a lot of people do. And all I see is the legacy financial systems, products, and services leading to financial desperation. And that's exactly why people are buying that absolute trash, these garbage assets. Now, bear in mind, like AMC, GameStop, I'm fine with the companies. I like buying products at GameStop. I don't really do it, but my kids would love to. And AMC, I love movie theaters. I don't give a shit about their securities. That means nothing. They literally printed paper out of thin air and they sell them to people. They printed the securities out of thin air. They said, okay, my company has this much revenue, and I'm going to say our company's worth $10 billion. I'm going to sell you a bunch of fucking paper that says, here, you own a part of the company, but you don't own a part of the company because your vote is marginalized. Because if you try and vote with 10 shares and there's 10 billion shares outstanding, you have no vote, so you basically have nothing. You literally don't even have governance rights. I have more governance rights in the crypto space than I would with any of the companies that I hold securities with. I mean, there's just nothing interesting whatsoever about legacy financial products. Anyway, let's get into the stream. You guys got a couple of good comments. Time horizon and overtrading, slippage and volatility. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Let's pop it over to the main screen and see who's in the stream. So I was talking to Preston saying, banking and working assets are my focus. Ain't that the truth? Banking and working assets. What the fuck am I putting capital in a bank for? I mean, literally, the second you put capital in a bank, they sell your dollars for treasury, short-term T-bills. I want those damn T-bills. I might as well just, that's what a bank does. That's their business. I might as well buy the damn T-bills. But and that's what I was tweeting about the other day, that I would love to denominate my bank account in T-bills instead of dollars. And I don't think that's structurally possible. I always say in the crypto space, be the bank, but I can't even be the bank in legacy finance. That's so ridiculous. It's so frustrating trying to navigate legacy finance. And you got the politicians criticizing the crypto space. Meanwhile, they should be criticizing the garbage platforms they have in legacy finance that are not, they don't iterate. There's nothing innovative. Why can't I have a debit card that I put T bills on? And I swipe the debit card and it pays just like it sells the T bill and pays the transaction. Why can't I do that? Make it. Make it quick. Not 5 years. That's stupid. We're not even going to have the dollar in 5 years. You're going to have a digital dollar. So make it now. So I don't lose 22% of my money next year because that's the amount M2 has been debased. Ridiculous. So frustrating. So frustrating that they're so defensive of deprecated systems. Deprecated meaning they're inferior systems that don't offer the functionality that you could achieve with other systems. Let me hit some comments. Lisa, hey, Noah, yesterday on Discord you mentioned Gods Unchained as being on your radar. Are you approaching this as a speculator? Well, Gods Unchained is a card game that is very nostalgic of Magic the Gathering. And I have a nice Gods Unchained deck or collection of cards. I bought them cheap. This was an Ethereum was like $200. I was just buying, which is the assets have retained value significantly. Not that I have any interest in liquidating them. They're NFTs, like 300 of them at this point, and you get packs for playing. It's get paid to play, which is awesome. And the Gods tokenomics I'm quite interested in because I'm significantly interested in the Gods Unchained platform. I think they're going to be very valuable because for the same reason Pokemon and Magic the Gathering are extremely valuable assets. They're rare and they're functional. They're useful. I enjoy playing with them, and many other people do as well. So that's some serious shit right there. That's more than on my radar. That's something I'm actively participating in. Long time listener, first time caller. My man. What's up, Noah? What are your thoughts on Form? Any interest in allocating a small percentage of the portfolio? I don't know what it is. I probably don't. I don't have much interest in allocating small parts of the portfolio anymore. I want highly concentrated positions, and this is what Warren Buffett would say. You want a highly concentrated position and a high conviction, long time horizon play. And I think that is a rational statement, a rational goal. It's consistent with some of the largest money makers in history, i.e., Buffett, and it has proven quite lucrative. And if everything plays out the way I speculate it, way the market more or less speculates it, it's going to be the right choice. High conviction, large capital allocations. which I have large capital allocations to smaller positions. You don't never go all in, never spread too thin, but there's no reason like 50, 60, 75% of the portfolio can't be deployed to a single asset and then you diversify with the remaining 25%. To me, that sounds palatable and interesting and rational nowadays. George, hello. Stops in the house. Matthew, wave, pleasure. Kyle, Preston, I don't know, but I showed the message briefly, and it was just, you know, ending that I'm interested really in banking and working assets and deploying a portfolio in the form of a balance sheet where I have principal assets that have a valuation, like a business has a property and all the supplies and tools and assets in the property, which value is going up and down. The property value is changing all over the place, and but the revenue and the cash flow is all that matters. FM, when will you know if ICE is revenue sharing token? So ICE will be a revenue sharing token, and they're um, interesting devs working on the project. If you follow their GitHub activity, their partnerships, their Discord, their commentary, their AMAs, it will be an interest bearing token. But bear in mind, it's currently not. So a core tenet of my strategy is I only allocate value to what is, not what will be or what may be. Obviously, it's like a 99% chance it's going to be an interest bearing asset, but it's not right now. I don't care that it will be. I don't care if it's pretty much guaranteed that it will be. I care that right now it's not producing revenue. Why? This is the most important thing. If I could deploy $100,000 and make an extra $500 to $1,000 a day, now we're talking. I'm able to calculate my business, the revenue of my business. Like if I buy an extra oven in the pizza shop and I'm able to double the amount of pizzas I make and I could sell those pizzas, I've doubled my cash flow. So that's what I care about, being able to calculate how much money I need to deploy to be able to generate a particular amount of income. Now, sorry, distracted. Um, so if I can't do that, it's not an asset I really want exposure to. I could do that with every asset I have on the balance sheet, every single one. And by the way, I looked into Hex yesterday. The interest rates are just, it's worthless. You get like nothing on a daily basis. If I do a 1 day lock, I'm going to get like 0%. So, and if I do a 7 day lock, you're getting nothing. You can't run a business locking up capital for a month. So it's literally non deployable in a business strategy. There's literally nothing that's remotely comparable to legacy business. It's non-functional. You need daily revenue. You know why you need daily revenue? You know why it's such an obvious thing? Because you go to work, you get a paycheck at the end of the week, and you use your paycheck to buy food and pay rent. So that's your goal, ladies and gentlemen. Your goal is so you make cash flow and revenue just like you do with work. That's everything. And you build toward that. If you make $1,000 a week, you want your assets to be able to produce $1,000 a week so you can buy food and pay bills and pay rent. Come on, guys. It's pretty obvious. I'm just saying. And I like to say I speak just honestly of what I see and what I do for myself. But these are just observations of what I know everyone wants. And everyone wants this in legacy finance, but everyone's so hung up on getting rich, but they have no idea what to do with the capital. No one will have an idea of what to do with the amount of capital that defines you as rich. They'll spend it. You can't spend capital. You need to take the capital and deploy it into assets that generate you money that work for you. It's not about being rich. Rich, I would argue, is having assets do work for you so you don't have to work. That's rich. That's different. Because what everyone does, anyone who wins the lottery, they go broke, and you hear about these wealthy celebrities that go broke because they have no idea what to do with the money. They have no idea how to sustainably be rich. You need revenue streams. Start a business. But why the hell am I going to start a business when I can have assets to do the work for me so I don't have to run the business? And that's just crazy. That changes everything. And I love it because it's contrarian. My strategy, the way I talk about these things, is not what everyone does. And those are the ideas that end up being most meaningful because what everyone does, most people don't win, most people don't succeed. So we can't do what everyone does. We don't. That's why I love to say we don't want to be rich. We don't want as much money as possible. If you make $1,000 a week in salary, your first goal is to make $1,000 a week in yield, in gains, and gains from sustainable sources that come in week after week after week. And that's how you change your life. Because if you strike it rich and quit your job, you're screwed. You know why? You're going to be bored as hell. You need to work. You need to do things that you want to do. So if you could replace your income and cover your overhead and cover your rent and food and whatever the hell you're paying, then you can just quit your job and find something else because your assets are doing the work for you. Anyway, let's keep it going. Jackson, Coinbase being the first exchange guaranteed principal of USDC and 4% interest account is huge. Yeah, because banking is screwed. They're going after all the banks with that. I don't know anyone. There's no logical reason left, no rational reason left to keep capital in a bank account. Um, that's one of the biggest things I talk about. You're losing 22% of your money every single year keeping your capital in a bank account. Decentralized finance will replace consumer banking unless the bank lobby Congress to regulate the decentralized finance. This seems like something that's reasonably likely to occur. That is a very true statement, and man, they'd be screwing the population of the U.S. because decentralized finance is one of the last hopes we have to really change the lives of the population in a positive way. Because if they're going to lobby Congress so we keep money in a bank account, they're screwing us. Because if you keep money in a bank account, you're screwing yourself. You're literally losing money every second of every day. That's the bottom line. I've been enjoying not focusing on short-term gains and assets, but I can't lie. Seeing CVX go up 50% yesterday felt pretty good. So the yield went down, but the principal obviously, woo, that was nice. I made like 90 grand yesterday. That was nice. I'm not going to sell it. I made 90 grand on paper. I have no interest in liquidating. I want the daily revenue. But that was a heck of an appreciation in one day. Watch what happens in the next couple of years. That's what I like to remind myself of. I could care less about, whatever, uh, one-time gains. I don't care about one-time gains. I care about recurring revenue streams that come in day after day after day. George, yeah, I'm a monologue kind of guy. Woo. My man. GPC Don, no, I like that he's talking about the rate of income per day as the ultimate portfolio. KPI. KPI. Nice acronym. APR, APY are variable. Value of the assets are variable. Income per day needs to be increasing over time to win. That's a great KPI. And obviously, over short time horizons, your daily revenue will fluctuate. It'll go down and up. But what's important is that it goes up over time. And frankly, if you make it 1,000 a week and you're on average making 1,000 a week from your assets, it's okay for it to be horizontal also, because you're making your income from work where you waste 8 hours a day of your life, and you're making it additionally. So that's a massive win. Um, well, teaching my friend George is everything. I see something that has changed my life, and other people deserve it too. I hate what I see with the securities markets and GameStop and AMC. It's a tragedy, and margin accounts and Robinhood, that no one's helping them, and they're hurting themselves financially, taking on debt that they have no idea how to manage, what it means. It's really a tragedy. And I always say we can do better, but in order to do better, these ideas need to be shared with passion and conviction. Otherwise, no one will hear them. No one will know of the ideas. No one will be able to even experiment deploying them, which is why I tell everyone new to crypto, take $50 in USDC and throw it on Aave. Just to see it, to feel it, to understand that it's a bank, but it's not a bank that's screwing you. because every single bank on the planet screws their depositors. That's not the best word. It takes advantage of them, takes their money and sells it because they don't want the dollars. Every bank sells your dollars almost immediately for T-bills because that's the asset they want. So why are we giving our dollars to a bank? I want to do that myself. Why the heck can't I denominate my bank account or my capital in T-bills? But from a management standpoint, it's pretty difficult. Like I would need a brokerage account with Fidelity or something. I would need to buy the T-bills, and then I would sell them as needed. I would liquidate them and do what, a wire transfer to a bank account to pay a credit card. It's the most ridiculous. It's so ridiculous. Or maybe I could get a debit card from Fidelity, and that's how I can manage it. It's probably a stupid 2-day clearing time on the sale of a T-bill, according to regulations, and that's some stupid shit. So I don't think there's any way to manage it. I'm going to look into it because I'd rather denominate my cash balance, my cash bank account, that I used to pay my overhead, savings account or checking account type stuff. I want to denominate that shit in T-bills because cash just burns, it melts into nothing. It's a problem. DeFi noob here, but I like your philosophy. I need a starting point. Should I start by putting some USDC in a curve pool, or do I buy some curve to put into convex? So starting out, please take $50 and put it onto Aave just to experience it. And you'll see the interest in real time, because you could always take that USDC and sell it to buy curve. And then you could put curve onto convex in the form of CVX CRV. So you could do all those things. But you need to understand the base or experience. You need to feel it and know what it's like for yourself firsthand to be able to put an asset. One second, honey. Of course, I'm on a phone call. Excuse me. No, no, I love you, honey. I'll see you in a minute. I know you have to tell me something as you sit in the box next to me. Sorry, guys. So we'll start with the fundamentals. You need to experience the fundamentals, even though that's not necessarily a position people are going to want to be in for a long period of time, because you're only getting a couple of percent, and we could do better in the crypto space. And but it's a good experience to have. Alex, my favorite asset is to be rich in time. Time is everything. Time is everything. So if you're sitting there trading day in, day out, losing capital and slippage and transaction fees, looking at charts, day trading, it's a waste of time. It costs a fortune. Adam's in the house. Up, no. Any thoughts on Badger offering convex helper assets? Does this kind of auto compounding free us from tax obligations? Yeah, so it's very complicated. I mean, taxes are so ambiguous. Nowadays I'm close to arguing that LP positions are a valueless asset because there's no market. If you take a Curve LP token and go on Uniswap uh, uh, or 1inch and you try and trade it, there's no market. You can't trade the asset for anything. And then if you say the asset has value because of its constituent components, that's a banknote. That's a pawn ticket. So then it's more consistent with a deposit. So there's a lot of issues with regard to dealing with taxation. But you're right. So auto compounding, if you treat it with regard to traditional accounting rules, you can achieve long-term capital gains treatment for your position. So the Badger LP helper contracts are really cool. So Badger has been doing things that are quite interesting lately, and I really appreciate how they're working with Ren and to get liquidity and value into the system from predominantly Bitcoin, which has a huge amount of stagnant equity. Can you believe that? A lot of stagnant equity doing nothing in Bitcoin. Do you think crypto? Killis is in the house, by the way. FM, do you think Convex token is undervalued? Extremely, extremely, to the tune of hundreds and hundreds of millions of dollars. It has more TVL than Yearn, and Yearn is worth whatever the hell it's worth, hundreds of millions, and Convex is like $32 million. Extremely undervalued, in my opinion. But that doesn't mean shit. The market will tell us all its value. An asset is correctly valued. based on what the market says it's worth, but I believe it will change value in the future. Daniel, do you think the crypto and MTG markets have a correlation? If you held power, power nine, would you sell today? Price continue to hold. See, that's a problem, and that's a problem with like NFTs and stuff. They're not working assets. They're buy low, sell high type stuff. Man, I miss my power. I had a power nine. I had all these fancy tokens. I miss my Juzam Gens, Library of Alexandria. Eureka's. Oh man, that gorgeous dual lens. Anyway, I'm just having a nostalgic moment about MTG. I don't know, man. Like the last thing I would want to do if I had that is sell it because they're so awesome and beautiful and cool and rare. Nobody wants to sell that. So NFTs really aren't about thinking to make a profit. They're kind of like something you buy because you want them and you value them. It's not for profit, in my opinion. Was that a bad question, or did you skip it by mistake, Sean? Where? What did you say, Sean? What's your question? I'm sorry, Sean. I don't skip things intentionally. I mean, write me a question, Sean. I'm happy to answer it. Chris, if you are in two or more pools on Curve, will your APR on V Curve be higher? No. Your yield on V Curve is based on all transaction volume for the entire protocol. So Curve, VE Curve is not tied to any LP position anyone could provide. Just for transparency, I'm not a fan of providing liquidity anymore. I don't provide any liquidity anywhere. I'm more interested in getting transaction fees associated with all liquidity, which is why ICE has caught my fancy, but it doesn't produce any revenue right now. So if ICE goes up 10x, I don't care. What I care about is if I could put 50 grand into an asset and get $500 a day, that's a heck of a productive asset. So I don't care what the price is of the asset. I care about how much revenue it generates on a single day. Let ICE go to 10, 15, 20 bucks. I could care less. But what I care about is knowing how much work it does. You're welcome, Chris. Sean, hit me with a question. I don't see a question above. I'm scrolling up. Okay, 63 people in the stream, 19 likes. We can do better. JT is the person to follow for technicals. The technicals look fine to me. Above 34,000. There's some wonderful wick off accumulations that people are talking about, and this is um, a heck of a region of activity. And I don't care whether it goes down or up. What I care about is transactions. If it goes down, transactions. If it goes up, transactions. And that's all that matters. Bear market, bull market, as long as at the end of the day you make 500 bucks, that's a heck of a productive day. Brandon, how do you feel about staking GRT as a long-term investment? I don't know what GRT is, my friend. Ethereum looks decent. Same thing as, actually, it looks better from a Fib retrace standpoint. I mean, that's a heck of a, it's not a hammer per se, but it looks good. Curve, I've been watching Curve denominated in Ethereum and Curve denominated in Bitcoin. And for a while, Curve was significantly outperforming Bitcoin. Ethereum is appreciating significantly yesterday, but it's still outperforming Bitcoin trend-wise. I've been really trying to stick to the weekly charts. I don't really care about the short-term charts, but that was a nice breakout. If you adjust, that's a breakout. That's obviously a trend breakout, a bullish trend breakout to the upside. Al, you're very welcome. I'm happy to talk and monologue, and it's not about people giving me feedback. This isn't about me. This is me just talking, and so people know what I'm thinking, and that's education. That's people hear my ideas and come up with their own ideas. Chris, the more I listen to you and the more I play around on Curve, the more I'm seeing I need to stay Curve on Convex. Well, curve on curve, the curve is meaningful, but curve on convex is a revenue share on the convex protocol also. So convex is the derivative asset of curve that just takes it to a whole nother functional level. What do you think of all the Tether fraud info? Well, Tether's not fraud. Tether is a collateralized stablecoin. Personally, I have no interest in Tether because I need stable coins so I could extract dollars. That's my fiat on and off ramp. And the purpose of Tether isn't to extract dollars. No one's minting Tether because, or no one's buying Tether because they want dollars. Their people are minting Tether because they have a bunch of garbage that's sitting around, be it commercial paper and debt and worthless shit that's completely stagnant, and you keep not being put to work, stagnant equity in many regards. And they're collateralizing it, and they're extracting the value out of it, and they're putting it to work. So it's a form of leverage, and the legacy system encourages this type of behavior, and that's how we got here from 2000, 2008. It's leverage. So they criticize Tether for the same reason, for doing the things that legacy financials are known to do. What a ridiculous reality. So I don't have a problem with Tether. They're just doing exactly what legacy finance has always done. Um, where was that? What do you think of all the Tether fraud? Uh, I'm interested in USDC and GUSD because I use that as a fiat on and off ramp. That's all that matters to me. Are you not tempted to sell your positions to dollars if markets get hot again in order to buy back low? No, I am not. I don't have time. I need to work, and time is money. So I'm interested in my weekly revenue stream. That's all that matters. Is there a way to estimate how much revenue you'll earn on a daily basis if you put X amount of dollars into CVX CRV? Yeah, because it shows you the percentage gain. You get an 85% on your money per year. Okay, so that's how you calculate it. Just a calculation. Um, to Julia, how do you feel about Sol? Solana's a big deal. From a tech perspective, I have no interest in deploying capital to it, um, unless I could get transaction fees for the entire network. Oh, now we're talking. That's wonderful. Polygon, Avalanche, Elrond, any functional network, obviously Atom and the Cosmos hubs, and Polkadot and the parachains. This is awesome stuff. Doesn't mean I'm going to buy it. I don't own many assets anymore. It's a very concentrated portfolio. All right, ladies and gentlemen, let's wrap it up. Wonderful day. I can get back to work. 61 people in the stream, 26 likes. We can do better. That's the name of the game around these parts because we could always do better. Wednesday, June 30th at 12:03. Discord is a great place to be. I hang out there all day long. As always, tell everyone to subscribe, and I will see you again tomorrow. Peace.